growth is now below the economy's potential, meaning unemployment should start to notch up a little bit here. So not a recession, but a much weaker economy. And clearly, when the economy is growing more slowly, and certainly slowly as the Fed thinks it will be, it's vulnerable to anything else that can go wrong. And goodness knows, there's a lot going on here in the U.S. Many things could go wrong. So I think the risks are elevated. Just to give you context, if I would put the probability that the U.S. economy entered into recession sometime in the coming year at about 35%. So well less than half, which is great, but 35% is, uncomfortably high.
And did your forecast come about since Donald Trump came to office in the White House?
Yes. The economy came into the year, the U.S. economy came into the year performing, I think the word would be exceptionally, it was exceptional. It was the envy of much of the rest of the world. The U.S. economy was performing better than anywhere else on the planet. But here we are, 3 months into the administration's term. And given all the uncertainty related to the trade war and other policies, DOGE cuts to jobs and government funding, but changes to immigration policy, potential Treasury debt limit battle, a lot of things going, fiscal policies in flux. All these things have made the businesses and consumers more cautious, more nervous, and now the economy is in a very different place. It clearly has slowed and prospects have dimmed.
Well, for the US Fed, it really is the May meeting that's next in play, and there could be a whole new level of uncertainty by then. Are you expecting any moves?
No, I think even by June, there's still going to be a lot of moving parts on policy. I think the uncertainty will still be the word to describe, everyone's feelings, and I suspect that they're going to still sit on their hands and wait for the dust to settle on policy before they start moving on to interest rates again. So I expect we'll have to wait a little bit longer than the next meeting in June, but I do think by the end of the year, we'll get better sense of how these things are, what policies have been put in place, how they're playing out, what it means for inflation and the economy. And I expect the Fed to start moving again. And I do think the next move by the Fed will be to lower rates. Rates are still quite high, still very restrictive. It's weighing on the economy. And I do think by the end of the year, the tariffs are going to start doing some real damage. So I think it's going to be a while, a few months, but by the end of the year, I expect to see some rate cuts. And that's pretty much, I think, the Fed's forecast. If you look at what they think is going to happen here, I think that's pretty consistent with it.
Is it frustrating for someone like you to try and make predictions in this environment?
Yeah, it is. It's a bit nerve-wracking, a bit tension-filled. I mean, when I think it's always difficult to predict what policymakers are going to do, whether it's the Federal Reserve Board or whether it's going to be the administration and Congress. But generally, the way I approach it is, what makes the most economic sense, and that will ultimately win the day. In most cases, not all the time, but in most cases. But in this go around, I can't figure that out. I just can't figure out what the economic motivations are, and what the what's behind all these moves, and therefore it's just impossible to know with any precision, and thus it's nerve-wracking. It's disconcerting. Feel at loose ends for very much for sure. And I think increasingly that's what many investors, business people, and consumers feel the same thing.
Mark Zandi, thank you so much for your time.
Yeah, anytime. Thank you very much.